Hey everyone, it's Ankit. Welcome to a brand new video. Today I want to talk about Sofi because I saw a lot of news and a couple interesting things happen with the Sofi stock, so I wanted to make a video on it. If you're excited for today's video, then drop a like. It really does help out and support everything I'm doing. Leave a comment with why you're excited for Sofi stock or why you're not excited. Subscribe if you're new for weekly videos on investing and about life. Let's try to hit 7,000 subscribers. With all that out of the way, let's get into today's video about Sofi. Rivian plans to sell a portion of its $60 billion IPO directly to Sofi users. Rivian plans to give retail investors the same access to its IPO that it gives access to Wall Street. The electric vehicle startup plans to sell a portion of its IPO directly to Sofi users. That means retail investors that secure an allocation to the offering will pay the IPO price rather than often higher prices when it starts its trading. So keep in mind that Amazon does also own 20% of Rivian. So you want to keep in mind Amazon owns 20% of Rivian. So here's why the bank charter will transform Sofi Technologies. And when I mean transform, I'm not talking about from Sofi Technologies to Sofi Bank. So it's been 3 months since they acquired Golden Pacific Bancorp, hoping to speed up the process for the bank charter, which is going to bring in multiple benefits, which include increasing lending capabilities. Banks operate by using deposits to offer loans. As lending is the primary source of revenue, the company will be able to expand its lending capabilities. And they will cut out the middleman or the third party by not relying on it. By being a bank itself, Sofi won't have to rely on the third party banks to provide the capital, driving operation costs down. And the third one we have is improving market and pricing control. While obtaining a national bank charter gives it credibility to the company, newfound pricing control will allow them to go after larger market share while already competitive in their prices. The lower costs will let a very flexible approach from the higher EBITDA that will fuel the further growth to more competitive pricing that will capture a more significant market share. Here's a chart or an illustration of what the bank charter can do for Sofi, as well as help Sofi. Key benefits of the bank charter: durability, lower costs, increase NIM from holding loans longer, enables increased growth and lending. The most important question that everyone's probably thinking: how long will it take for Sofi to reach profitability? According to 8 industry analysts covering Sofi, they break down the break-even is coming near. They predicted that the final loss in 2022, before generating positive profits of $28 million in 2023. Therefore, the company is expected to be in break-even in roughly 2 years from now. So the third year, expected to be more profitable and be a profitable company, because it takes time for companies to become profitable and capture the market and the customers out there that are available for their product. But they also have to find ways to be more of a moat and have a competitive advantage compared to all these other companies that are doing the same thing. Things that you should do research on before you invest in Sofi and buy some shares is the historical track record for Sofi. the management team, and other high performance stocks. This will help you determine if Sofi is a good investment or not. If you haven't watched my video on Sofi, you should, because it goes over a lot of this, and it will give you a better understanding what Sofi is planning and what they want to do and how they can reach their goals. And their management team, I have a video in the video. I go over the management team and where they all come from, their background, their experience, and all that. So you could check out the video. I'll have it at the end of this video, so you can just go right to it. 2 stocks that could turn $500 into $5,000 in 10 years. The 2 stocks are DigitalOcean Holdings, DOCN, and Sofi Technologies, SOFI. So DigitalOcean is a cloud computing company. They allow access to services like compute and storage through the internet, eliminating the cost and complexity of managing on-site hardware. However, the products offered by legacy cloud vendors are typically aimed to large enterprises, meaning they're often too complex for individual developers, startups, and small or medium-sized businesses. So the growth for customers doesn't look great. From 2019 to 2021, it's only 7%. The revenue from 2019 to 2021 is about 27%, which is not great, but it's not bad either, but it's good. Let's get back right into it, because this video is about Sofi, it's not about Ocean. Sofi Technologies, simplifying consumer finance. They're planning to be the one-stop shop for everything related to banks, credit unions, fintech companies, student loans, personal loans, mortgages, financial solutions, Roth accounts, which if you don't have a Roth account, I highly recommend you create one. So they went from 976,000 members from 2019 to 2.6 million, which I'm also a member now, and I've been using Sofi ever since Robinhood had their issues. And their revenue spiked up from 442 million to 799.5. That's 48%. So the numbers don't lie. We can see that this company has a high chance of reaching that goal from $500 to $5,000 if you have that much invested in 10 years. And that's plenty of time. I think it can get even closer to maybe like 3 years or 7 years, because 10 years is way too much for that, but good things take time. Management currently puts its market opportunity at $2 trillion, giving the company plenty of room to grow its business. More importantly, Sofi's broad mobile-first platform has clearly captured customers' interests, and I expect the dynamic to remain in place as the company continues to bring new products to the market. That's why this fintech, which is currently has a market cap of 16 billion, could grow tenfold over the next 10 years, or even 7 or 3. Sofi website traffic up, posed for growth. The fintech company Sofi is expected to grow 45%. Sofi operates mostly in the digital lending, neobank financial products, and banks as a service. The rapid growth in the number of services that its clients use indicates that the company is proficient at improving its value proposition by adding best-in-class products. Sofi provides the infrastructure for its clients through Galileo. Galileo provides white label card issuing, processing and management services, fraud detection, and more in banking as a service model. Galileo serves 95 of the world's largest neobanks, including all the following above, even Robinhood. The company's management has a rich experience in the technology and the financial sectors, and including managers who have shown impressive results in the largest companies in the world in their previous positions. Here's a graph of products in the thousands. Q1 2021, 3,185. And then as you can see in Q2 2021, 3,667.